Hey, good morning, everybody, and welcome to another daily market report by Mike Bjork. Today is Thursday, August 12th, and a bit of economic news releases today, and so let's go ahead and jump into it. We got the jobless claims. The weekly jobless claims came in. The previous week came in at 402,000 reportings. They expected a slight uptick, about 410, but this is the good news. It actually dipped under 400,000. So that psychological barrier we've been talking about, trying to get under 400,000, came in. So that's pretty good news. And you'll see later that the market's actually responding well to that news. That's what they kind of like. Basically, the statement I was reading earlier is that the economy looks like it's slowing down, but at least the jobless claims seem to be, or the jobs might be showing some improvement. So we'll see as we go along. So there's also the trade gap that came out this morning, and we were at a negative 50.8 billion. They expected a dip a little bit at 48.2 billion, but actually increased negative 53, went the opposite direction. So that kind of came in a little bit unexpectedly. Obviously, not a pleasant surprise. So and then yesterday we had the federal budget deficit that came in after my last recording yesterday. So the previous one was at 160 negative 165. Sorry about that, folks. 165 billion dollars, and it actually came in at negative 129 billion. So that's actually pretty good news in itself as well. So all very good news. So let's go ahead and take a look at the headline news. Stock market's up a lot. They like what the initial jobless claims came in at today. Concerns of the euro debt crisis is, yeah, there's still concerns about the euro debt crisis. Sorry about that, escalating, as we mentioned yesterday. And some of the major Asian banks are now kind of reviewing lending to the French banks, as we mentioned yesterday, that there is rumors that France might be the next to be downgraded. And of course, they're kind of disputing those rumors right now. So as we mentioned, a lot of investors are also kind of looking at France right now. The Chinese yuan data just came out. The Chinese yuan is increasing against the U.S. dollar right now, so it's kind of a sign that the Chinese central bank is trying to rein in inflation by through currency appreciation right now. So that looks like it would be another tool that they're trying to use to rein in their inflation numbers. And then there's another program that I guess Obama's considering looking into is maybe a special program to use foreclosures as part of rentos to help stabilize the housing market. If we could take some of those distressed properties off the market, it may help stabilize help stabilize it. So it's not a bad idea. But the big thing is, a lot of lenders aren't in the business of lending. I mean, renting properties. They don't really want to manage properties or be landlords, so they just rather move the properties off their books and stuff. So that would be an interesting concept. See if the banks are willing to go along that. It's not a bad idea, I don't think. So let's kind of see what else we got here. And Realty Track came out with a report saying that they think maybe home loan foreclosures may have already reached its peak. So that's could be a positive news. So hopefully we've kind of seen the worst in the past now and kind of move forward and hopefully see things hopefully start seeing some light at the end of the tunnel here. So let's go ahead and take a look at the bond market, see where interest rates are at. We had a nice little rally yesterday as we almost touched 105, and it was kind of a roller coaster. If you saw my blog yesterday, you'll see what happened. I mean, how volatile it was. We had probably about 85 basis points of trading going back and forth yesterday. Today we dipped a little bit. We're down about 24 base. We opened about 24 basis points from where we left off yesterday, and you're starting to see the star pattern right here. So we could go in a sideways pattern for today. As the stock market kind of takes in, try to create some interest rate losses. I mean, as they're trying to take in some buy and low while the market's been taking kind of a beating right now. Also, take a look at my blog. You'll see some of the reasons I had. As you can see, a lot of loan officers that were on this program here, they're all recommending the lock right now. As and take a look at my blog. I gave some reasons why I think it's time to act now if you're looking to buy a home or to refinance because these rates may not stay down here this low, even though the Fed said rates will remain low. Uh, through 2013. I gave some pretty valid I believe some valid points in there. So go ahead and take a look at my other blog where it's called "Strike It While the Iron's Hot." So, anyways, anyways, you guys are looking to buy a home or as home buyers, or if you guys are looking to refinance, stop by my website, CaliforniaMortgageTips.com. I think you'll find some great information on there. You can also reach me through there if you have any further questions or anything I could be of assistance. So don't be a stranger. You guys have a wonderful day, and we'll see you tomorrow.